A happy new year to everybody around the world, the mining industry community. It is day one here as the new season begins. Hard to believe, September already here, Labor Day past. Those that celebrate it in North America, hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and is it a happy new year over in Germany where Volkswagen, as the Germans call it, Volkswagen, as English-speaking people call it, the V is an F and the W is pronounced like a V in German. So actually the German pronunciation, since you asked, is Volkswagen, for your information. And not a great time for Volkswagen, or Volkswagen as they say, threatening to shut down plants, right? And of course, this isn't an EV car podcast, but it is a natural resources podcast. And as we've been saying here, I would argue for years, the crucial importance of these minerals at the beginning of the supply chain. In a sense, this is an EV podcast in terms of where the EVs begin, which is these natural resources, the costs that come into making an EV. And as we've seen and noted over the weeks, months, and years, China is utterly dominating the beginning of the supply chain. Now, all of a sudden, Volkswagen is threatening to shut down plants in Germany. And as they say here, an extremely tense situation. CNBC has this report out yesterday, Labor Day. Volkswagen warns of plant closures in Germany, citing extremely tense situation. Key points: they will no longer be able to rule out plant closures in the country, citing the specter of major cost-cutting measures in order to future-proof the company. Volkswagen said it felt compelled to bring an end to its employment protection agreement, a job security program that has been in place since 1994, in order to secure, quote, urgently needed structural adjustments. Quote, the situation is extremely tense and cannot be resolved through simple cost-cutting measures, end quote. VW brand CEO Thomas Schaefer said in a statement. And I think that last line is really the takeaway here for us and what circles us back to the critical minerals. We cannot cut our costs to profitability here. And what does that tell you? I mean, what is the inference? It means the base costs beyond labor are the issue, I would argue. And let's continue. Volkswagen Group CEO Oliver Blume said in a statement, quote, the European automotive industry is in a very demanding and serious situation. The economic environment became even tougher, and new competitors are entering the European market, and I have a story about that coming right up. In addition, Germany in particular, as a manufacturing location, is falling further behind in terms of competitiveness, end quote. As a result, Volkswagen Group's chief executive said the company, quote, must now act decisively, end quote. Volkswagen said that brands within the company would need to undergo a, quote, comprehensive restructuring, end quote, before adding the current situation means that even plant closures at vehicle production and component sites can no longer be ruled out. Quote, the situation is extremely tense and cannot be resolved through simple cost-cutting measures, end quote, VW brand CEO Thomas Schaefer said in a statement. Quote, this is why we want to initiate discussions with employee representatives as soon as possible to explore the possibilities for sustainably restructuring the brand, end quote. So just 3 days before that, Electric posted a story, the great electric vehicle news website, electric.co, and they posted a very interesting headline here too. BYD's bold move in Germany could spell big trouble for Volkswagen. And listen to this. China's leading EV maker BYD is making big moves to gain a foothold in Europe. BYD's latest deal could spell big trouble for Volkswagen in Germany. BYD is taking over its distributor in Germany, allowing it to sell its cars directly in Europe's largest auto market. On Friday, the Chinese auto giant officially signed an agreement with Hedon Mobility Group to buy out its subsidiary, Hedon Electric Mobility. Over the past 2 years, Hedon Electric has imported vehicles and spare parts for BYD to sell in Germany. However, the move will give it more control over pricing and other key parts of distribution. BYD will now be able to sell its cars directly to buyers in Germany and set prices on its own terms. And we have a quote from BYD Executive Vice President Stella Lee, who said, quote, "Together with its retail partners, BYD will further extend outstanding customer services and warranty support in Germany," end quote. In addition to gaining control of distribution, BYD will also take over 2 flagship stores in Stuttgart and Frankfurt. This move comes after the EU announced plans last week to cut BYD's EV import rate from China to 17%. And finally, according to research from Rhodium Group, BYD earns 14,300 euros on each Seal U model sold in Europe. That's even more than in China, with a 1,300 euro profit per unit sold. Even with higher tariffs, BYD has the flexibility to offer lower prices. Does Volkswagen have the freedom? It's not likely. So I open with this because, to me, this is the fall preview. With 17% tariffs in Europe, it kind of looks like game over to a certain degree in Europe for the automakers. So as Volkswagen is saying, it looks like plants will shut down. And finally, on the EV front, because again, this is something else we've been noting, which is really the attraction of hybrids. This was super interesting. Ford has quietly announced that it's realigning what it's calling its electrification strategy. And as it says here on electrive.com, another car news website, it says here it will reduce its annual investment in purely electric vehicles from 40 to 30% and focus more strongly on hybrid drives. Something else we've been noting here, I mean, if you're not a purist on using gasoline and you're just a consumer that still wants to be environmental, but if you're not a purist about it, the hybrid is super attractive. Right? Hybrids are starting to attract attention, with Ford pivoting to hybrids, interestingly. As we saw with Toyota, even a year ago, they were mentioning this. So now looking like a lot of foresight here. So finally, on the electric vehicle front, Tesla, their October 10th Robotaxi event will be at Warner Brothers Studio in LA. So the Robotaxi is going to be potentially announced by Tesla on October 10th, and that is also a headline from Electric. So a fall preview here. It looks like what is happening in the automobile industry is going to be a major story heading into the end of the year. So very interesting there. Continuing on, circling back to the critical minerals that are required at the beginning of the supply chain. We've been seeing an interesting story about the libido corridor in Africa, whose main purpose is to take, I would argue, copper from the copper belt to the western side of Africa in Angola to be shipped over to the US and to perhaps Mexico, also to Europe. Now, according to a story here in First Post, where they're actually quoting African Business Report, it looks like now the U.S. wants to extend the libido corridor, with all of the success that they're having there, to the Indian Ocean shores of Tanzania. And now they're calling this the Trans-Africa Corridor. So, I mean, this is just like par for the course, something, again, that we've really been highlighting for years here, which is how geopolitics, natural resources, and economics are all colliding here. You know, it's very 19th century, isn't it? This hunt for resources. It's very old school, but we're seeing it here play out in the fall of 2024 in big, bright, bold, shiny headlines here. So quite interesting. I'll just read a few paragraphs from this article on First Post. The U.S. has announced plans to extend the Libido Corridor, a key transport route traversing the mineral-rich regions of Angola, the DRC, and Zambia, right to the Indian Ocean shores of Tanzania, according to an African Business Report. Launched in September 2023 by the U.S. and its European allies, the Libido Corridor links the rich mines of northern Zambia and southern Democratic Republic of Congo to Angola's Libido port on the Atlantic coast. Following extensive discussions with these three countries, the U.S. is now focusing on East Africa, seeking to extend the corridor further east. Helena Matza, the acting special coordinator for the Partnership for Global Infrastructure and Investment at the U.S. State Department, who concluded a week-long visit to the DRC and Tanzania, revealed discussions about incorporating Tanzania into what she referred to as the, quote, Trans-Africa Corridor, end quote, which will facilitate the global export of copper, cobalt, and other critical minerals. An African business quoted Matsa as saying, quote, "Our mission on this trip is to continue expanding the Trans-Africa Corridor. That includes relaunching our partnership with the DRC and engaging with the Tanzanian government and private sector on next steps towards extending the economic corridor to the Indian Ocean," end quote. And it recalls William Sheriff's line, that great interview that we did on this podcast about, let's call it 3 or 4 months ago, where William Sheriff said, to paraphrase, the West doesn't have much foresight, but once the problem happens, it's very fast to respond. In a sense, you have to be impressed with how quickly the U.S. is moving here on this Trans-Africa Corridor. So, pretty interesting, isn't it? And just finally here, on this article, the corridor's total cost will be between $1 billion and $2.3 billion, which sounds pretty cheap in U.S. budget terms. And interestingly, so far, the African Development Bank has pledged $500 million, and Italy has committed $320 million, said Matsa. So quite interesting. I mean, of course, we saw Italy, who was part of the Belt and Road Initiative and then seemingly had to leave after visits from the U.S., now are helping fund this Trans-Africa corridor. Quite interesting. Now, turning over to Victoria Gold, there has been an independent review board that has been appointed by the government. So we were talking about how they were considering this last week. So we have another update. This is from CBC News. Yukon appoints board to investigate cause of catastrophic failure at Eagle Mine. And there's that word again, catastrophic, interestingly. And just a few lines here. The Yukon government has appointed a trio of experts to look into the cause and factors behind the heap leach failure at Victoria Gold's Eagle Mine earlier this summer. The 3-person independent review board is tasked with figuring out what led to the June 24th slide, which spilled hundreds of millions of liters of cyanide solution into the environment and forced the immediate halt of operations at the mine site. The review is part of Yukon's response to the, quote, catastrophic failure and its impact on the environment and human health and safety, end quote, the government said in a news release on Friday afternoon. So Chief Donna Hope of the First Nation of Nacho-Nyak-Dun vindicated here again. Continuing on, the review will look at the design, construction, operation, maintenance, and monitoring of the heap leach facility. Heap leaching is a method of extracting gold from stacked layers of ore using a cyanide solution. Quote, understanding the causes of the failure will help inform remediation of the failure, possible options for a future restart of mine operations at Eagle Gold, as well as other future operations in the Yukon, end quote, the release states. The review is expected to take 6 to 8 months, and the results will be made public, the government says. It's being funded through the receivership of Victoria Gold. The 3 board members are Jean-Marie Conrad, a geotechnical expert, Lee Sawatsky, a senior civil engineer, and Marky Smith, an engineer. The government says the First Nation of Nacho-Nyak-Dun has a, quote, open invitation to join the independent review board process at any time, end quote. Mines Minister John Stryker was not available for comment on Friday, but in a written statement, he said his government, quote, recognizes the seriousness of the heap leach failure, end quote. He continued, quote, the independent review board is the most expedient process for determining the causes of the heap leach facility failure and will lead to changes that will help to prevent another event like this one from occurring in the future, end quote. So it continues over at Victoria Gold. And, the sad thing about this whole story, in my view, is nobody planned for a mine disaster. Nobody wants that to happen. But it was really the response. It was the lack of transparency. It was the lack of collaboration. It was the lack of communication. It's the lack of engagement, really, that at the end of the day seemed to really cause a whole bunch of unnecessary results, including the CEO being fired, the board resigning. In a sense, if there was more engagement from the very beginning and sense of shared purpose on this, it seems to me it wouldn't have turned out as it has. But that is just my view. And so coming up this episode, we have Tudor Gold CEO Ken Konkin on his experience at Pretium, what we're calling the story of Pretium Part 2. This time it's, what I put in quotes, the scandal. The whole story of when Strathcona backed away from the project, saying that they weren't convinced that the gold was there. According to Ken, there was even more gold than was estimated, but it was just the methodology. You'll hear all the details of a very, classic story in Canadian mining in this episode. So we'll get part 2 this episode, quote unquote, the scandal. And the reason I put it in quotes there is because it wasn't really a scandal, as you'll learn this episode. So lots to look forward to here as we begin a new media new year. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner and on Instagram at The Northern Miner and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, Apple Podcasts, and SoundCloud. And with that, let's turn to the news. And turning to the website, China's bulging commodity stockpiles shows depth of economic woes. So more concerns of economic headwinds in China. This is Bloomberg News via mining.com. Inventories of key raw materials are piling up in China, evidence that economic activity remains too feeble to clear a surplus that's crushing prices from steel to soybeans. And it just highlights how important the Chinese economy has become. It is determining the prices of so many of these commodities now. The government's growth target for the year looks increasingly out of reach, an unwelcome development for the drillers, miners, and farmers that supply the world's biggest importer of commodities. The blowout in stockpiles might suggest that some traders were caught out by the economy's poor performance since the end of the pandemic. Others may have underestimated the extent of China's pivot from the old economy to the new. But the stockpiling is also testimony to the premium placed by Beijing on making sure its factories and citizens never run short. Even when its economy is hot, China houses outsized quantities of raw materials. And listen to this. It holds more than 90% of the world's visible copper inventories, nearly a quarter of the world's crude oil, and over half of staple crops like corn and wheat, according to research from JPMorgan Chase. So, while consumption and industrial activity are surely weak, China's state-owned importers may not be too fussed if they've mistimed their purchases given their mission to guarantee that the country's reserves are sufficient come what may. Continuing on, Biden administration considering price support to backstop critical minerals project. Very interesting story here. This is a staff writer at mining.com. In an effort to support U.S. critical minerals projects, the Biden administration is considering market intervention to counter the crash in prices of lithium and other key minerals caused by the overflow of supply from China, Politico reported this week. An official from the Energy Department told the publication that the new policy would involve setting a price floor and agreed to pay the difference when market prices fall below the threshold for critical minerals produced in the U.S. Quite interesting. It seems to me like a kind of price control. The new measure would bolster U.S. domestic production of minerals for clean energy technologies and electric vehicles, a major part of the Biden administration's climate and manufacturing agenda. More importantly, it would lessen America's reliance on China, which dominates the global supply chain for critical minerals. And we have a quote from an Energy Department official who told Politico, quote, "If we move forward on anything like this, the intent would be to give the nudge that is needed to set off the flywheel versus create a permanent subsidy or cushion for a particular sector or company going forward," end quote. The effort comes on the back of delays and cancellations of several U.S. minerals mining and processing projects, including those that were set to receive a collective $1 billion in grants from the Biden administration. However, it is unclear how much the policy would cost, according to Politico's report. The details are still being discussed, but the financial backstop would likely be available for a limited time and apply only to projects that the department has deemed close to being competitive in pricing. So I just don't understand why they don't stockpile, because stockpiling, at least to me, seems like closer to free market, shall we say, because it's the government going, okay, we should have a lot of, say, cobalt or lithium or nickel, all metals that have fallen in price this year. Why not stockpile it? Because then you retain the free market without having a government official deciding at what price you're going to start, backstopping the market at. It seems less arbitrary to me, a more elegant solution, the stockpiling solution, over the financial backstop, I would argue. I mean, it's clear something needs to be done. I mean, we've been discussing on here like the conundrum of what to do in this, circumstance where the mining costs are below the price you get on the market by virtue of, often China being able to flood the market. We've seen it with rare earths. We've seen it with nickel through Indonesia, and on it can go. Again, my philosophy on this is, hey, you want to sell us nickel at $7 a pound? No problem. We'll buy it all. You want to sell us cobalt at $11? No problem. We'll buy it all. You want to sell us lithium at $10 a kilogram? No problem. We'll just keep buying it and we'll stockpile it. Because in a sense, this is the metals that everybody kind of said they wanted, isn't it? Cobalt, lithium, even nickel. So let's buy it. Continuing on, U.S.-Peru signed Memorandum of Understanding for Cooperation on Critical Minerals. So last week we saw Argentina. This week we're seeing Peru. We're seeing the extension of the Libido Corridor all the way to the Indian Ocean now through Tanzania. Plans for that. I mean, again, I think of William Sheriff there saying not much foresight in the West, but sure reacts quickly when it realizes it's in trouble. So here we go. This is Reuters via mining.com. The United States and Peru signed a Memorandum of Understanding on Thursday to improve cooperation on critical minerals, the State Department said in a statement on Thursday. The memorandum sets the direction for further collaboration in critical mineral resource sector governance, investment, and global supply chain security, the State Department said, adding the signing happened in Lima, Peru. So moving on all fronts here. Continuing on, BHP moves ahead with expansion of Olympic Dam copper refinery. This is Reuters via mining.com. So BHP continuing to be bullish on copper. BHP Group is continuing to push ahead with the expansion of its copper smelter and refinery at Olympic Dam in South Australia as global miners ramp up their efforts around the key metal for greener energy transition. The world's largest miner on Friday said the government of South Australia has begun an application and assessment process for the expansion, citing a notification in the South Australian Government Gazette. And here is a quote from Anna Wiley, BHP Asset President Copper for South Australia. Quote, "We are already growing BHP's copper production in South Australia with projects and studies underway at all of our operating sites, and we're moving at pace to potentially double our current production by the middle of next decade." Continuing on, latest permit for Hudbay project in Arizona paves way for major U.S. copper boost. This is Henry Lazenby at the Northern Miner. And it says Hudbay Minerals now has in hand the second last permit it needs to start construction at its 85,000 ton per year Copper World project in Arizona. The permit granted on Thursday advances Copper World, Hudbay's main development project, towards becoming the third largest copper cathode producer in the United States. It could boost Hudbay's yearly copper output by over 50% to around 250,000 tons starting in 2029, contingent on construction decision by 2026, other permits, financing, and building. And we have a quote from President and CEO Peter Kukilski, who said in a news release, quote, "Receiving the aquifer protection permit is a significant de-risking event for Copper World as it brings us one step closer to being fully permitted," end quote. And continuing on, relating to our opening discussion on EVs, GM delays additional $330 million investment in Thacker Pass, Lithium Americas says. This is Reuters via mining.com. Lithium Americas said on Friday automaker General Motors had delayed the second tranche of investment worth $330 million in the miner until the end of the year. GM had announced an investment of $650 million in two tranches in Lithium Americas last year to help it develop the Thacker Pass lithium mining project in Nevada, which holds enough of the battery metal to build 1 million electric vehicles annually. The lithium miner said it is exploring alternative structures for the investment and extended the date for the deal closure to December 20th. In case the deal is not closed on their end by that date, Lithium Americas will have to grant additional rights to the automaker. GM did not immediately respond to Reuters' request for comment. And continuing on, BYD says fate of lithium project is in hands of Chile government. This is Bloomberg News via mining.com. BYD said the timing of its lithium project in Chile remains up in the air as the Chinese electric vehicle juggernaut continues to negotiate with authorities in the South American nation. In April last year, BYD was granted access to preferential prices for lithium carbonate produced by Chile's SQM to feed a plant that would start making lithium iron phosphate for cathodes by the end of 2025. But terms are yet to be settled, and the start of production is expected to be delayed, BYD Executive Vice President Stella Li said in an interview on Monday in Shenzhen, adding that the company has to make sure it gets a quote-unquote good deal. Quote, "We are still negotiating with the local government. The ball is now in the government's court," end quote, Li said. For the Chinese automaker, the cathode project offers a foothold in a country with the world's biggest reserves of lithium. For Chile, the project is part of a push to move further down the battery supply chain. So, very interesting there. And just a few headlines. Zambia plans state firm to own 30% of critical minerals mines. This is Bloomberg News via mining.com. Mines Minister Paul Kabuswe unveiled a strategy on Thursday that said he will allow Zambia to maximize the benefits from its deposits of metals key to the energy transition. Africa's second largest copper producer aims to more than quadruple output of the metal by early in the next decade, but it also has deposits of cobalt, graphite, and lithium. Very interesting there. And another headline, Mexico's Tizapa mine offline due to strike. Industrias Panoles says, so this is Reuters via mining.com, so now Industrias Panoles announcing an indefinite halt to operations at its Minera Tizapa unit in the state of Mexico due to a strike called by the National Mining Union. So more strikes, more labor upheaval in the mining industry. Continuing on, Paladin's takeover of fission uranium yet to win shareholders' support. This is Bloomberg News via mining.com. And so far, it says here, Paladin has fallen short of winning enough support from shareholders to seal the deal. And here's a quote from Paladin in its earnings statement on Thursday. Quote, "The majority of the votes received to date are in favor, but are not sufficient to approve the transaction. The postponement of the meeting is intended to provide additional time for all security holders to have the opportunity to make their voices heard." End quote. One wonders if it's just summer holidays. Kind of interesting there. It says that Paladin's agreement to buy Fission for $845 million US is contingent on at least 2/3 of Fission shareholders voting in support of the transaction by August 26th. So now it's been postponed to September 9th. So we'll see what happens there. And finally, China's July net gold imports via Hong Kong rise for the first time since March. This is Reuters via mining.com. It says China's net gold imports via Hong Kong in July rose by about 17% from the previous month, the first increase since March, data showed on Tuesday. So China ramping up its buying of gold once again. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 3.91%. That is 0.08% higher than last week. The UK 10-year gilt is yielding 4.05%. That is 0.05% higher than last week. And the Italy 10-year bond is yielding 3.7%, and that is 0.06% higher. So bond yields ticking higher. And turning to precious metals, gold is trading at $2,534 even per ounce. That is $13 lower than last week. Silver is trading at $28.86 per ounce. That is $1.07 lower than last week. Platinum is trading at $922.90 per ounce. That is $40 lower than last week, and palladium is trading at $964.50 per ounce. That is $15 higher than last week. So palladium edging higher, while gold, silver, and platinum edge lower. Turning to industrial metals, copper is trading at $4.13 per pound. That is 8 cents lower than last week. Iron ore is trading at $98.70 per metric ton. That is 65 cents higher than last week. Aluminum is trading at $1.10 per pound. That is 5 cents lower than last week. Lead is trading at 94 cents per pound. That is 2 cents lower than last week. Nickel is trading higher at $7.61 per pound. That is a penny higher than last week. Tin is edging slightly lower at $14.67 per pound. That is 26 cents lower than last week. Cobalt is unchanged at $11.02 per pound. Lithium is slightly higher at $10.54 per kilogram. That is 25 cents higher than last week. Uranium is lower, breaking $80 at $79.25 per pound. That is $3 lower than last week. And zinc edges lower at $1.29 per pound. That is 3 cents lower than last week. Zooming out, a bit of a mixed bag. If I had to venture a thesis here, I would say we are in late summer doldrums, I suspect low volume, because it's a little bit of everything. Palladium higher, precious metals lower, nothing too dramatic across the board. Basically, you're seeing a bit of chop, if I had to generalize on what we're seeing in the metals markets, and those are your metal prices. Coming up, I'm very pleased to welcome back to the show Ken Konkin, President and CEO of Tudor Gold, who discusses his experience working at Pretium and the great discovery they made there. If you want to hear about the discovery, check out last week's episode, part 1. This is part 2, the great quote-unquote scandal, which wasn't really a scandal, where Strathcona backed away from the project, suggesting that there was no gold in the sample that they were taking. As Ken says, they actually found more. So echoes of Bre-X in the concerns that Strathcona brought out. The stock price took a big hit. And, according to Ken, the company never really regained its mojo in the same way, even though he would argue the data proves that they had more gold than was being estimated. And really, this was a methodological issue with Strathcona. You can hear it all for yourself in this fascinating story of Canadian mining, the story of Pretium Resources, part 2, quote unquote, the scandal. I hope you enjoy it, and I will see you on the other side. So you make the discovery through sampling, not through the visual, if I understand you right.
Correct.
But through doing the sampling, and all of a sudden a big surprise that you didn't discover from the visual, but through the sampling, you get a massive amount of gold, or a large amount, pretty shocking numbers. Then what?
Well, here's the thing, history kind of works against you in a way, because what it does, it tells you that you had this shocking number. You saw it. It was electrum. You knew it. You visually saw it. Even though you didn't see it report, and we now sample everything, the point is, when we actually go after high grade, and everybody, including me, thought they'd be high grade, potty, small targets, which is what the Stewart camp was known for. It wasn't known for having these giant systems that were kind of intrusive related, that had colloidal systems. None of this was known at the time. So we weren't actually expecting much out of it, other than maybe, hopefully, 1 million ounces, right? So at best, but the idea was you're still going back to your model, doing 100-meter step outs on drilling 100 to 200-meter centers. But it wasn't until 2010, when we're drilling this thing, that Joel Ashburner and I were sitting there talking about what would happen on a big step out. And my God, we also got 5 kilos again, and in a different spot. But it wasn't really linking anything up. So I got to writing a weekly report to Ken McNaughton. And what happened is, I wanted the acronym. I wanted to give this a name. I got tired of calling it the gully between Galena Hill and Electrum Ridge. I'm sitting there having a bottle of wine at my desk, looking at Vineyards Quality Assurance, VQA. I need something like that. And for some reason, something regal popped in my head. Valley of the Kings, VOK. What a wonderful name to put to this. But the risk was there. What was the risk? What if it turns out to be a dog? Well, I'm telling you, one of the first holes in 2011 was a 200-meter step out. It's like tearing back your vascular system on your arm, showing all the veins to be pure electrum. And that's exactly what came up on that. One of the earliest holes came out to prove it true on a theory we had. Let's go way forward, put a hole in on my trend, 108 degrees on strike. If it's there, it should be there. And boom, we couldn't believe it.
Right. And as you explained before, electrum is something like 2 parts silver, 1 part gold, a very good sign. It's a good thing, right?
Well, this was
and
50 kilos. You couldn't miss it. I mean, it was like,
right.
it's in the percent. You map it in the percent.
Right. Now, just finally on the exploration part before I want to move on into how the company was formed and, basically what happened over the rest of its existence. Now, Valley of the Kings was a different area. So was that a whole other discovery, or from the previous work at, say, Snowfields and Brucejack, did you kind of know there should be something over here?
No, it was all back to just trying to, from the bridge, from all the different zones, trying to stitch all these little pieces of puzzles together to make one large pit. We still are going back to that. We didn't want to just chase individual discrete structures.
You're looking for a system.
We wanted a big system. We want a big open pitable system that you can get homogeneity to it, like the ones we've been discovering since then. So this was the target to go after it. So we didn't really believe in it until it was undeniable. After we started hitting huge hits, we're talking kilo hits over and over and over, it was obvious that east-west lineage that runs off of the Brucejack Lake Fault was producing, or the epicenter of these gold hits. So in 2010, I think the IPO came out. Silver Standard really didn't believe that we had a mine in our grasp. We did. Quartermain did. Ofsnick did. McNaughton sure did. We all believed. Ron Burke did. So 3 of us split out. We left Silver Standard and basically started Pretium. So that was the beginning.
So you move over to Pretium. The IPO is around, do you remember what year?
2010, I think.
Okay, so shortly after, in a sense, these discoveries are being made, you guys go, okay, this is time for a spin out here, right?
Right.
And then it's 2013, and I remember, I think I was an investor of Pretium at the time, and, it was doing well, and then all of a sudden there's a scandal, and there was kind of a concern, I think, was it Strathcona that
Correct.
said they were stepping away from the project, right? And kind of ambiguously, and all of a sudden all these questions were raised, the stock price goes down. Tell us about that whole situation.
Oh, yeah, that was unfortunate. I was asked in 2013 to go have a look at it and see what I thought of the whole process of I was in Peru at the time, came back up to look at basically it was a sample tower that came in that would detect essentially polymetallics in the percent. So what we did is we started feeding this thing straight ramp material that had nothing in it, just to see if we missed anything, if anything showed up. Then we fed it some low grade. Then we fed it some, medium grade, then higher grade. Then finally, we got it up to feeding it super grade. But what happened is, halfway through the project, there wasn't much gold coming out of the system. And Strathcona came out and said, there's no gold here, and wanted to back out. What they didn't realize is their approach, their system did work. It did work very well. So we were taking a 10,000 ton test, and we wanted to wait to see the 10,000 ton test. So we had the resource was a multiple indicator kriging, an MIK estimate, and they wanted to cut grades and say, no, you can't do this old school, like hanging wall, footwall. If you get an ounce, anything over an ounce, you cut it. It's cut at an ounce. That's it. So these multi-kilo things don't factor.
This is the whole thing of trying to prevent this kind of nugget
Yes.
Right? What's the term for it?
Nugget effect. Yeah.
Nugget effect, exactly. Where all of a sudden you get a massive thing, and all of a sudden you start to extrapolate from that massive nugget that, it must be all across the whole thing. So they say, we're going to cut this off at an ounce, because otherwise it's too crazy, right?
Right. So it's a conservative approach, but here's the thing is, if you're in the red light district doing the same thing and you're drilling of your 20 holes, right? You drill your one hole, you get 20 grams or 30 grams, great. You don't cut anything. What happens if you drilled 4 grams, 5 grams? Don't you add, say, 5 grams to it to get it up to the grade you should have? Logically, you would. Statistically, you should, because it just nicked hitting a 20 grammer. So you should add something by rationale, but it doesn't. It does not. It takes a conservative approach. So we looked at MIK, and MIK, what it does is it populates how many apples you have on a branch. It may not tell you exactly where the apples are, but that branch should have between 7 and 10 apples. This branch should have 12 to 15. In the end, you take that tree with the orchard, you should have a number that's accurate. It was accurate. That MIK came out to be accurate. I was shocked. In fact, it's still conservative. What happened? These guys said no, they want to put a press release out and did. We couldn't stop it. They said there's no gold there. The stock went from $18 and plummeted to $2.87. And then Ken and I were actually in southern Peru at the time, yelling at our manager there, started buying like crazy because it was at 280 something. It's going to bounce back up. People will see it's an error. And it did. It bounced up, but only to $8. Damage was done. Damage was done at that point. So it cost us $1 billion easily. And we never kind of got past that stigma of having no gold. But the thing that killed me was even when we did produce the 10,000 ton test, we were looking for 4,000 ounces. We got 5,600 out of that thing. So there was the gold that was produced from a 10,000 ton test, a 40% higher number than what we anticipated. So all things being equal, that should never have happened. It was a simple thing to have corrected to have helped. We should have introduced probably a nickel standard or something and introduced to see if you're actually counting the nickel to know if the system is correctly working. And the other one was if it's correctly sampling because it kind of mucked up in places. But those are technical things that we could have corrected in hindsight. But in the end, it worked okay. When you got to the bigger grades, it did indicate, because we never saw that data. They pulled out and quit before that data was available. So it was a premature bloodletting.
Right. And what led to that? I mean, usually it's a communication failure of some kind here. Was there not very good communication between the team and Strathcona? Or were they just sort of saying, we don't need to communicate here. We know what we know. And you're saying that ultimately their system got it right, but their methodology kind of got it wrong. Like, did they, I don't know, apologize later? Or do they still kind of stick to their guns and say, well, yeah, maybe in a certain case it didn't work out, but generally speaking, this is still the right way to proceed?
No, you have to understand the damage is done. They immediately went out and were the whistleblowers and didn't wait for the results. They were premature. And there was, not to my knowledge, there was any apologies. There was never any kind of professional sanctions made. I mean, they're nice enough guys. They're great guys, but just, I wish they would have just been patient with it. And I can't say that there was a lack of communication, but there was strong communication that went back.
Right.
And I'm telling you that it was like, are you crazy? You're saying there's no gold here. They're saying, oh yeah, it's all belongs to one structure, north-south, the Cleopatra vein, which is absolutely not true. But in the end, there was a lot of misunderstandings that people don't understand the deposit. That's the problem. Do the pros, not the Joes. Be a pro. Put in your 10,000 hours like I did.
And in a sense, like, would you attribute the misunderstanding, let's say, of the deposit to people just don't want to believe that it was that good, in a sense? Like, I mean, was that part of it or not?
Behind me, I've got pictures of all the gold hits. They're the world-class gold hits of the 17, the 15 kilos, the 42 kilos that we had. I had these with me in Peru. I showed them to the gold gods of Peru, these families that own these mines. They looked at it and said, that's impossible. Gold does not occur with that. That's chalcopyrite. That's no way it's gold. They thought we were scamming them. I go, amigo, there is no copper in the system. This is pure electrum. This is electrum. It's not. So everybody on grades that large had disbelief. They all did. And it's real. When you see it, it comes out and you estimate it. And I'm going to tell you that we had a problem because we were on communicator systems. Everyone's listening to us now. And you're sending kids up the hill to come back with gold hits. So we actually invented a fish scale. So if you got 1 or 2 grains of gold that would be under an ounce, say 15 grams, you'd say I picked up a couple of undersizers. And if you picked up something about an ounce, you'd say I got a pink salmon. If you picked up a 2-ouncer, that was a chum. If it was a 3-ouncer, it was a sockeye. Anything over the 100 gram up to a kilo, was a coho. Anything over a kilo, now you're getting into territory where you're going in percent. A kilo per ton, up to 10 kilos, which is a percent, is a Chinook or a spring salmon. Anything over 1% was tai. So if someone said I picked up a tai, I'd get out of my office and I want to see this, making sure it's going to be over 10 kilos. One student got 6 out of 6 guesses correctly because they had to guess and write it in, and we drew it out of a hat. The winners got to go on a charter, a fishing charter down the Portland Canal for salmon if their guess was correct. The last draw out of the hat. At the end, we had so many draws, we had to do 2. The last prize was, because it was late in the season, was snowboarding or skiing at Whistler. That accuracy was pinpoint. We were able to estimate gold very accurately at Brucejack, one of the only projects in the world you could do this to.
Where does this project, in your mind, from your perspective, like, where does it measure up then as far as, you know, the richness of this project, I guess, as a deposit, shall we call it? Like, how does it measure up on a global level?
Well, you know, you compare it to the same region of what Eskay is. It's only one Eskay Creek. There's only one mill back in the Archean belt. There's only one Brucejack. However, there's the OK occurrence that happens in other places along the entire the arch, right? So for me, it is Canada's largest underground mine with the highest grades. It's the highest grade mine we've got in Canada right now. Windfall will probably take precedence because the grades they're taking such a wide swath of things and such big stopes for the economics of it that they're pushing from 10 grams down to 8 grams now with a 6 gram cutoff, so pretty tight. So I think that the exploration is not over yet. They haven't gone to the limits of, say, Gossan Hill to the north where we had a 5 kilo hit. We haven't gone back to that. So there are more Valley of King occurrences in the pile. So they just have to do the same process we did, put in the time, sample everything, drill it off, and keep going. I think the riches have yet to be discovered.
Now take us through to when it was bought out. Just wrap up the story for us here then, Ken. After the scandal, it basically kind of came back. I'll call it scandal in quotes. But it basically came back, but the damage was done, as you said. And I remember it did scare off a lot of people. It kind of had echoes of Bre-X to a certain degree, probably, right?
Correct. Correct. People said another Bre-X. We saw all that. But we had the negativity from the word up. You couldn't build it there. It's impossible, surrounded by ice. We had negativity. Every project's got it. We're adverse to that, I tell you. So in the end, yes. So what the final thing was, we did sell to Pretium, did sell to Newcrest, but I was gone at that point. I was off to Peru, fighting the next one, and I was with Treaty now to the north. And I was still good friends with the people at Pretium, still are good friends with the people at Newcrest, now Newmont. So you look at the amount of sales of this thing. I thought for sure Barrick would have bought it because they liked it, but I don't think they understood the deposit really. If you don't understand something, I think you tend to shy away from it. No hanging wall, no footwall, structural corridors. Same thing that we've got at Treaty Creek right now. We're uncovering high-grade corridors in the middle of a big deposit. Same thing.
Final question here then. So was kind of a couple of questions in one. Was there basically not too much drama after that? Like, did things start to proceed? You guys went into production and basically, could we call it more or less uneventful? I'm sure there were things going on, but in the big picture, relatively uneventful. And how much did it end up selling to Newcrest for?
Yeah, it was a $4 billion sale. So it sold at about $18, again, back up into that range where it was before it fell. But it was a long, circuitous event to get to that point. And to me, it was one of those events that should never have taken place. It was unfortunate, caused a lot of economic hardship on a lot of people. There were lawsuits that even Bob Quartermain had to go and act as a witness to as of a year ago. I mean, I see Bob regularly when he's up in town from Panama and on his things at his Dakota Gold. But it's something that you can live without, honestly. And it's one of those things. We were listed in the States, so you had these frivolous litigious people coming at you saying there's no gold. Well, how could there be no gold? You're producing 350,000 ounces a year at some of the best grades. So going forward, it was a huge success story despite every bit of adversity we were facing. So that just goes to say that tenacity and adaptability of people is paramount. You have to have that.
Beautiful. Ken Konkin, President and CEO of Tudor Gold. Thank you for joining us and telling us the very fascinating story of Pretium Resources on this week's Northern Miner podcast.
Great to see you.
A big thank you once again to Ken Konkin, President and CEO of Tudor Gold, for giving his time to share this fascinating story of Pretium Resources, a story that many of us who have been investing in the mining sector know about. I actually don't invest in the mining sector now, which is probably best as a mining host, but I used to 10 years ago, so I followed the story quite closely. And it's really fascinating to hear an insider's view of what happened in the story of Pretium. Thank you, dear listener, for joining us. I hope you're having a wonderful start to the media new year, as we call it here. And thank you for your ongoing support. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.